Hey everyone, so this video is going to be on 4-hour market structure, and what we're going to do here is map a bullish stretch and a bearish stretch, and we're just going to show you how these time frames correlate together. And in the next video we'll add 15-minute into the mix and show you how you can start building ideas of which way the market may or may not go and why. So we're going to start down here where the purple points begin, and the purple is our 4-hour highs and lows. So here we have a lower high and a lower low. This is the first point where 4-hour structure gets broken and we become unconfirmed bullish. Now, for those of you that remember, we were talking about a minimum pullback of at least 40-50 pips, and that to me is not enough. So the first bit of structure will likely be up here, and you'll get better with this as you map a little bit of structure. So that's about a 52 pip pullback, which is enough to be classified as structure. Where down here that's probably anywhere between 15 and 25 pips. Although that's great for 15-minute structure, it's not enough for 4-hour. So that'll be our first bit of structure on the 4-hour. We've now become unconfirmed bullish. Now you may also notice that we've already become bullish long before we even had a chance to get to the daily high. In fact, we became bullish long before 75 pips, and that's confirmed. Now if you were to be unconfirmed, you could say you were bullish about 170 pips before you even got to the daily structure, because once this high got broken, to me we became bullish as soon as this candle closed. Obviously, we didn't consider the impulse to end until this pullback occurred, but you can see how much quicker that happened. And the daily high formed on April 15th, and this 4-hour high got broken on April 5th. So ultimately, you had the right bias to start buying 10 days sooner with 4-hour structure. One of the reasons why 4-hour and 15-minute paired together is the absolute best time frames for intraday trading. Now as we take this high here, we become confirmed bullish. So one here and one here. Now ultimately this push doesn't end till we get to the top, which is your daily high. Our pullback would be here. And once again, we're always just looking for that candle body close. So now you could double check. I don't think this is 40 pip pullback here, so that's about 31 pips. So that's not enough to be structure, so we'll finish this push right to the end, and we'll consider this low as our pullback. And ultimately, once in a while, daily and 4-hour structure will align, and that's totally fine. And once we're done all this, we will join the 4-hour structure with a blue line, and it'll kind of help you see how it all correlates together. But so far you could see we have quite a few more structure points as compared to our daily. So this helps us get our intraday bias quite a bit quicker than daily does, while still giving us a high enough of a time frame that our directional bias is correct. So obviously we're very bullish. Now, if 4-hour does turn bearish, we know that the daily is bullish. So even if it does turn bearish, we don't expect it to last for long. It's likely a daily pullback to mitigate something or grab daily liquidity. So we have 4-hour structure here. This becomes our low, and ultimately, let's see how big this pullback is. I don't think it's enough. 38 pips. So that's right on the borderline of whether you want to consider that structure or not. To me, that's probably close enough to 40. We can consider it. If you don't want to, you don't have to. Completely up to you. I don't think that's enough of a pullback, so ultimately we shouldn't have any structure till up here again. And our pullback would be here. Now, once again, the 4-hour is aligned with the daily for a bit, and we can just double check this. I don't think there was, yeah, there's not quite enough there. You know, if it's in the high 30s and it's close enough to 40 and I need structure, I will gladly classify it as structure, but in that case it just wasn't close enough. So right now, ultimately our impulses are ending at the same points as our daily structure, which is totally fine. And as of right now, you can see our order flow has just shifted bearish, same place it did on the daily. The only difference is we become confirmed bearish quite a bit quicker on the 4-hour as we get an extra structure point a lot quicker. So once again, we get another structure point here. Whereas you can see daily doesn't have any structure in here, 4-hour does. The bearish order flow obviously continues. I don't believe that's enough. It doesn't look like it. Definitely not. I believe this would be enough to be classed 39.7. That's close enough. So this to me would be our next 4-hour structure point. Once again, let's just check this pullback. Oops. So you're about 40 pips there, so we can class that as structure. And once again, that becomes a structure. Now here I want you to make note. Once again, we do take this high, however, it's just a wick. So we're not going to count that as structure. And you can see while we became bullish on the 4-hour, on the daily, it was just simply a pullback to mitigate something. We can even move this point over this candle wick because that's our highest point. And ultimately, this would be our next bit of structure. Once again, we'll check if that's enough. So we're in that low 30s range, so I don't think we can classify that as structure. Oh, hold on, let's just measure that again. So the low, this candle wick to the high. 34, not quite enough. We won't class that as structure. So our first bit of structure would be down here. This is definitely enough. And once again, as long as we are taking these wicks with candle bodies, they are structure points. Now our pullback would be all the way up here. And as this low gets taken, we create a new 4-hour structure. So now 4 hour kind of realigned with the daily, and I believe the next few pullbacks of ours will be probably very similar to daily, as they're not very large daily pullbacks. So ultimately, we don't create any 4 hour structure again till we take this low here, the wick. So as of right now, we're still just kind of realigned with the daily. Now with 4 hour, we get another structure point here, one here. Nope, we actually don't even get one here because that does not give us another candle body. So with that being said, our next bit of 4 hour structures all the way up here, still aligned with that daily. And sometimes you will get a bit of price action here where it seems like you don't have much 4 hour structure. And the way you look at this is you would just look at who's in control and basically the big picture. And the big picture is order flow is very bearish. Even though daily became temporarily bullish, it was likely nothing more than just a liquidity grab to come here, liquidate this whole area, mitigate something in here. And the way you can start formulating these ideas is you start looking at how these highs form. So once this high formed and this supply zone formed, you could see that we never had an opportunity to come above it once again, and supply ultimately stayed in control. So the 15-minute would fine-tune this whole area in here. You would have unfortunately had a few days of very nasty price action where you had to play the ranges, and ultimately the bearish order flow resumes. Thought I missed the purple point. Perfect. So yeah, as of right now, we've kind of realigned with the daily time frame. I believe this is enough of a pullback to be classified as structure, so get another structure point here. And ultimately, we get another push right into here. So we don't have any more 4 hour structure till this high gets taken. So if you don't have a lot of structure to work with, it's always good to look at who's in control. So just to make note, here demand takes control. Once this wick fails, although it's not structure because it did not give us a new low down here, you can look and see that every time price comes down, demand holds and price makes higher prices. So you can basically say demand is in control right now. Just like once we get up here, we don't make any new structure for a while. However, you start making note that supply is in control, as we are not able to break this and candle body close on top of it. And there will be times in the market where you have to just look at who's in control. The 15-minute market structure will help you fine tune this a bit, as daily and 4 hours doesn't always work, but that's where the 15-minute will help you out. But the overall directional bias is still bearish, as we're still continuously making lower prices. Now the next bit of 4 hour structure is here, then that's our pullback. We have structure here. And we'll just zoom in so everyone can see. So when this candle wick got taken, once again we have 4 hour structure. And this being our low, this low doesn't get taken with another candle body, so we don't have any more structure till this high is taken. So now our next bit of structure is here, a bit of a pullback. And at times you'll feel like you have too much structure, and at times you don't have enough, and it's just the way the candle sprints sometimes, unfortunately. So to me, our candle bodies don't happen till here, so that would actually be structure to me, not that high wick, as that high wick ultimately failed to candle body close. We need that candle body close just so everyone can see. We did not candle body close above these wicks here. The candle body close didn't happen until this candle. So we're going to map this as the high point, not this wick, since this wick belonged to a candle that did not body close. And sometimes you have to zoom in to see these things, but the thing with 4-hour and daily is you don't have to map structure that often, whereas with 15-minute this can get to be a little bit hectic, but it's not bad. So once again, this would be our high point here. We have a low point. Whoops. A low point here, and another high point here. Let's just double check. That may or may not be enough of a pullback here. If not, we'll go to the next point. So that's not quite enough. So we'll take this point right up to here. This will be our pullback. This again is not enough of a pullback. So we'll basically go right to the end of the impulse in this case, where the pullback is enough. So we're pretty much all caught up now, and let's just zoom out and look at the whole picture. So you can see how much more structure you have with 4-hour. The odd time it will align with the daily structure for a little bit, and you don't have any 4-hour structure for a while. And that's totally fine. It doesn't happen often, but it will happen here and there. And ultimately, though, the idea was just to show you how many more points we have. Now, what I want to do is take all of these dots of ours, the 4-hour structure, and join them with the blue line. So let's just make that blue, make it a little bit lighter. Perfect. And then what we'll do is we'll map a little section of 15-minute market structure. It will not make you guys sit through me mapping all of this as 15. What we'll do is we'll do a little bullish stretch and a little bearish stretch. And you guys can ultimately watch the videos over and over and just see how they correlate together. And once you apply this to the rest of the concepts, it'll start making sense. But the most important thing is that you guys get market structure, because that is literally what the rest of the course will be built around. There's nothing worse than knowing all the content but not knowing which direction you should be looking at trading. So I definitely advise that everyone spends a lot of time on this section. In fact, if you're having trouble, I would even go as far as recommending just mapping structure for 4 or 5 days, and then everything will kind of start coming together for you. And once you get used to it, structure's not that bad. The odd time you will make a mistake and map something as structure that shouldn't be. It seems to happen more on the 15-minute than anything, as structure changes so often. But for the most part, it's not too bad. So we'll just zoom in, and you can kind of see what we mapped here. You can see how these time frames correlate together, and ultimately we're always looking at the market as either being pro 4-hour trend or we're in the 4-hour pullback, and that's how we have to wire our brain as intraday traders. Now what the daily does is the daily tells us when the 4-hour trend is likely to end and realign with it. For example, 4-hour became bearish here. The chances of daily becoming bearish just because 4-hour became bearish are not as high. And if we really start dissecting this, you can say you had equal lows here and you had an order block here that needed to get mitigated on the daily. So as soon as this 4-hour high was taken here, you once again had a bullish bias. But that's what the daily can help us do. So what we'll do here is just quickly zoom out one last time so everyone can see how the time frames correlate together. And yeah, we'll cut this video here, and I will see you guys in the next video as we map a little section of 15 minute.